Good morning. This is a more comprehensive lesson on real property taxation. This lesson is composed of two parts. The first tackles the basics of real property tax, and the second involves the cases decided by the Supreme Court which lay down basic principles of real property taxation. We begin this lesson by knowing the three laws governing real property taxation. Number 1 is the 1987 Constitution. Section 28 of the Constitution provides that 1. The rule of taxation shall be uniform and equitable. The Congress shall evolve a progressive system of taxation. 2. The Congress may by law authorize the President to fix within specified limits and subject to such limitations and restrictions as it may impose tariff rates, import and export quotas, tonnage and wharfage dues, and other duties are imposed the framework of the National Development Program of the government. 3. Charitable institutions, churches, and personages or convents appurtenant thereto, mosque, non-profit cemeteries, and all lands, buildings, and improvements actually, directly, and exclusively used for religious, charitable, or educational purposes shall be exempt from taxation. And 4. No law granting tax exemption shall be passed without the concurrence of a majority of all the members of the Congress. These provisions must be emphasized because, in case the real property tax imposed is in violation of the Constitution, it can be struck down and considered unconstitutional. It is basic, too, that the Constitution is the fundamental law of the land. The second law involving real property taxation is Republic Act 7160, or the Local Government Code of 1991. Title II thereof is all about real property taxation. Title II covers sections 197 to section 283. Better find the full text of the provisions as you continue this lesson. In a little while, we will go to the specifics of it. The third and last law that involves real property taxation is the National Internal Revenue Code as amended by RA 10963, or the Tax Reform for Acceleration and Inclusion or TRAIN law. Specifically, this law authorizes the Bureau of Internal Revenue Commissioner to divide the Philippines into different zones or areas and shall, upon mandatory consultation with the competent appraisers, both from the private and public sectors, and with prior notice to affected taxpayers, determine the fair market value of real properties located in each zone or area, subject to automatic adjustment once every 3 years through rules and regulations issued by the Secretary of Finance based on the current Philippine valuation standards that is found in Section 4. After knowing the three laws, we go to the basics of real property taxation. It applies to all forms of real property such as lands, buildings, improvements, and machinery. For better understanding of the classification of properties, look at Article 415 of the New Civil Code, which provides a listing of immovable property. Real property tax is imposed on the basis of ownership of real properties. Being a local tax, it is paid before the Treasurer's Office of the province or city or municipality within the Metropolitan Manila area. However, under Section 247 of the Local Government Code of 1991, the city or municipal treasurer may deputize the barangay treasurer to collect all taxes on real property located in the barangay. This power of the local government unit to impose taxes is in consonance with the policy of the Republic, stating that the local government units enjoy local autonomy. Consequent to this, how is the collection of real property shared? If it is the province collecting the real property tax, 40% of that goes to the municipality and 25% goes to the barangay where the property is located. The remaining 35% is retained by the province. If it is the city or municipality within Metropolitan Manila area is collecting, 1/3 goes to the barangay where the property is located, and 2/3 is retained by the city or municipality within Metropolitan Manila area. So when should you pay the real property tax? It accrues on the first day of January of every year based on Section 246 of the Local Government Code of 1991. It may be paid in installments. If you pay earlier, there is a discount based on Section 251 of the Local Government Code of 1991. If you pay late, then you can be subject to 2% surcharge per month. Is there an exemption to the real property tax? Yes, even if the general rule is that it must be paid. Section 234 of the Local Government Code of 1991 provides the list of exemption. These are as follows. Real property owned by the Republic of the Philippines or any of its political subdivisions except when the beneficial use thereof has been granted for consideration or otherwise to a taxable person. Charitable institutions, churches, parsonages, or convents appurtenant thereto, mosque, non-profit or religious cemeteries, and all lands, buildings, and improvements actually, directly, and exclusively used for religious, charitable, or educational purposes. All machineries and equipment that are actually, directly, and exclusively used by local water districts and government-owned or controlled corporations engaged in the supply and distribution of water and/or generation and transmission of electric power. All real property owned by duly registered cooperatives as provided for under RA 6948. And machinery and equipment used for pollution control and environmental protection, except as provided herein, any exemption from payment of real property tax previously granted to or presently enjoyed by all persons, whether natural or juridical, including all government-owned or controlled corporations, are hereby withdrawn upon the effectivity of this code. And you have to take note of the exempted properties. We are done with the first part. I will see you in the second part. I hope you have learned so much from this. See you!